Hello students, I am Dr. Sandeep Kumar Bansal, working at Shree Atam Jain College. Today I will discuss with you basic concepts of income tax and how we can determine the residential status of a person under the Income Tax Act 1961. The purpose of this presentation is only to guide the students regarding the topic. So, under this lecture, I will cover the meaning of income tax, brief history of income tax in India, basic concepts of income tax, and how we can determine the residential status of the person under the Income Tax Act. So, let's start with the meaning of tax. Basically, tax is a part of the individual's income which is required to be paid to the government to generate the revenue of the government for the overall development of the country. In simple words, we can say that tax is the part which is collected by the government, and that is the major source of revenue for the government, and government in return, the government is investing this amount for the overall development of the country regarding for the welfare and for the basic amenities which are provided to the public. So let's discuss the brief history of income tax. Basically, income tax was started first time in 1860 by Sir James William. In 1918, a new income tax act was passed. Again, it was replaced by the Income Tax Act 1922. After that, it become after the independence, we have passed the Income Tax Act 1961, which was implemented from 1st April 1962. This act is also applicable for in the state of J&K, Jammu and Kashmir. So let's discuss some basic concepts of the income tax. First is the income. The meaning of the income under the Income Tax Act is the periodical receipt of one's business or from the land or from the investment, or we are receiving any part of the income as a salary from the third party. Under this, the first thing, the main aspect is that the income must come from outside source. There must be a definite source. The source of income must be a definite source, and the income must be come from the outside source. The permanency of income, the income may be permanent or may not be permanent. Temporary income will also be included under the definition of income. If we are reimbursing any amount, that will also the part of the income. Income from the disputed title. In the case of the disputed title, the person who is receiving the income from that disputed title, that will be the person who is liable to pay the tax on that particular disputed title. For example, there is any house which is which the house there are two owners of that particular house, and the Mr. A and B are the two persons those are claiming the ownership of that house. But in the time of dispute, Mr. A is receiving the rental income from that house. In that case, this income will be included into the total income of Mr. A until the dispute is solved out. Now, the treatment of gifted income, that will also be treated as the income for the person. Income includes the loss also, and the tax treatment of income, that income will be taxed according to the provisions of the Income Tax Act. Now, the second basic concept comes to us, that is agriculture income. Agriculture income generally means any rent or any income derived from the land which is used for the agriculture purpose, or any income derived from the land by the agriculture operations such as the processing of the agriculture produce and any attributable to the income attributable to a firm house subject to the satisfaction of the certain conditions. Those are specified, those are mentioned under the section 2 subsection IA. In simple words, any income derived from the agriculture land by cultivation of any crop, by cultivation of any product, that will be treated as the agriculture income. The income derived from the, if the agriculture land is given on the rental basis, then the rent received by the person, that will also be treated as a agriculture income. Next is the third item under basic concept is the person. Person, in simple words, we can say that the person is the person who is the that is a human being. But under the income tax act, the definition of the person is given under section 2 subsection 31. So individual, the person will include the individual, HUF, Hindu undivided family, company, a firm, association of person, local authority, or the body of individual. So all these will be included under the definition of person under Income Tax Act. Now the next term comes to the assessee. Assessee, basically the person who is liable to pay the tax under the provisions of the Income Tax Act, that will be known as the assessee. Assessee, the person against whom or in respect to whom any proceedings of the Income Tax Act has been taken for the assessment of the income, or deemed a person who is deemed to be the assessee under the provisions of the Income Tax Act, or the person who is assessing default under the provisions of the Income Tax Act will be included under the definition of assessee. So first item under the assessee is normal assessee. Normal assessee, who is normal assessee? The assessee against whom any proceedings of the Income Tax Act are going on, or in simple words, who is liable to file the return under section 139 3 of the Income Tax Act, that will be treated as the normal assessee. And second one is the representative assessee, a person who not be liable only for his own income, but he may also be liable for the income of the other person, such as the agent of non-resident, guardian of the minor person, that will be the representative person. So it will included under the definition of representative assessee. Next is the deemed assessee. Deemed assessee, in case the assessee, the person who dies after writing the will, then the executor of the property will be treated as the deemed assessee. But if the person dies intestate or without writing the will, then the eldest son of that person will be treated as the deemed assessee. Now, third one comes to us, that is the assessee in default. Assessee in default, the person is deemed to be assessee in default who fails to fulfill the statutory obligations of the Income Tax Act. Assessee in default except in the circumstances where he obtained the order saying the demand in due course, that will be treated as the assessee in default. Next basic item comes to us, that is the assessment year. Assessment year, basically a year that comes after the financial year, or we can say that the year which is starting from the 1st April ending on the 31st March, in which the income earned in the financial year is assessed for the tax. Means the assessment year means the financial year in which the income of the assessee earned during the previous year is evaluated or is assessed for the tax. Generally, this year will start from the 1st April and ends on the 31st March. Now, question arises regarding the previous year. Now, what is the previous year? Previous year is the financial year immediately preceding the financial assessment year. Previous year may be the complete financial year, or that may be the less than the total financial year, means the previous year may be in months. Year in which the income is earned in the previous year and such income is taxed in immediately following the year, that is the assessment year. And previous year may start from the 1st April and ends on the 31st March, or when the source of income is generated from that time, the previous year will start up to the next 31st March. For example, if any person has started the business on 1st October 2022, then for that person, the previous year will start from 1st October 2022 and ends on the 31st March 2023. Next, there are some basic exemptions from the rule that the income earned in the previous year will be assessed for tax in the assessment year. We have discussed in the last slide that income earned in the previous year will be assessed for tax in the assessment year, but there are some exceptional cases in which the income earned in the previous year will be taxed in the same year in which the income is earned. These cases are when the person is running the shipping business and the person is non-resident. So under section 172 of the Income Tax Act, the income earned by the person if through the shipping business, that person must be the non-resident. Then in that case, we will calculate the tax at the rate of 7.5% of the income earned from this business. And second case is person leaving India. If the person is leaving India and with the intention that to not to come back in India, or we can say that in simple words, person is leaving India for the settlement in any foreign country. So that in that case, if assessing officer is think so that the person will not come back, then the income earned in the previous year will be taxed in that same year. Same case with the AOI, BOI, and artificial judicial person. If these bodies are formed for the particular purpose, then on the accomplishment of that purpose, the income will be taxed in the same year. Persons likely to transfer property to avoid the tax. If assessing officer is of the view that person is transferring the asset to avoid the tax, then that income will be assessed for tax in the same year. In case of the discontinued business, assessing officer has a discretion to use the power to tax to calculate the tax amount of the income earned in the financial year. So the tax may be calculated in the same year. So next comes to us the gross total income. Gross total income is income earned from the salaries and income under the head of house property, under the head of business and profession. Fourth one is the capital gain, and fifth one is the other sources. The total of all these sources will become the gross total income. So these are some basic concepts under the Income Tax Act. Now we will discuss how we can determine the residential status of the individual. So under the definition of individual, we have read out the definition of a person. Under the person, first part is the individual. So to determine the residential status of individual, there are some conditions. Residential status of the individual will depend upon the stay of the person in the previous year. So we will consider some basic conditions, that is, assessee must stay in India in the previous year for more than 182 days, or if the person is not satisfying this condition, then what is the second condition? Second condition is assessee must stay in India for not less than 60 days in the previous year and has been in India for the period of 365 days or more in the last four immediately the previous year. Means we will check the first condition 182 days. If that is not satisfied, then we will check the stay of the person in India for 60 days. If his stay in India is more than 60 days, then we will check the condition whether he was in India for not less than 365 days in the 4 years immediately preceding the previous year. If the person is satisfying one of these two conditions, then it will become the resident. Now, resident is of the two types, ordinary resident and the not ordinary resident. Ordinary resident, the person will get the status of ordinary resident if he will satisfy these two additional conditions. First one is the he is resident in India in the at least 2 out of the 10 previous years immediately preceding the relevant previous year, and the person is in India for more than 730 days or more during the 7 years immediately preceding the relevant previous year. Here there is a one important question, one important point to be noted, that if the person, if the individual will satisfy both of these two conditions, only then he will got the status of ordinary resident. So what it means, first of all, we will check the status whether he is resident or not. After that, person has to fulfill both of these two conditions. Now, next is the for the not ordinary resident. If the person will not satisfy the conditions of the ordinary resident, then we will check out the conditions of the not ordinary resident. The person, after satisfying the one of the basic conditions under section 6 subsection 1, and second he has to fulfill one of the two additional conditions, that he was a known resident in the 9 out of the 10 previous years, or he was not in India for 730 days, or his stay in India was less than 730 days in the 7 years immediately preceding the relevant previous year, or a citizen of India having total income exceeding 15 lakh in the previous year and his stay in India is more than 120 days but less than 182 days. In that case, that person will got the status of not ordinary resident. Next, if the individual is not satisfying both of the basic conditions, then the individual will got the status of non-resident. So, in nutshell, we can say that the individual may be the resident or may be the resident or may be the non-resident. If he is resident, then we will check the additional conditions to check the status whether he is ordinary resident or he is availing the not ordinary status of the resident. Now, next comes to us the residential status of HUF, Hindu Undivided Family. The basic status of the Hindu Undivided Family depends upon the control and management of the affairs of the HUF. If the control and the management of the affairs of the HUF is situated in India, then that HUF will avail the status of the ordinary status of the in ordinary residential status. HUF can avail the status of ordinary resident. First of all, we have checked the residential status. If the control and management is in India, whether is totally in India or partly in India, it will decide regarding the residential status, whether it is resident. If the control is in India, then that HUF will be considered as the resident of India. Now the question to check the whether it is ordinary resident or not ordinary resident, then we have to apply two conditions on the status of the Karta. Karta is the manager of the HUF who is operating the HUF. So we will apply these two conditions. He has been the resident in India in at least 2 out of 10 previous years immediately the preceding the relevant previous year. Means he must be in India at least 2 out of the 10 previous years. And second condition, that is his stay in India is more than 730 days during the 7 years preceding the relevant previous year. If the Karta will satisfy both of these conditions, then the HUF will avail the ordinary residential status. Second is the not ordinary residential status. If the Karta is not fulfilling the conditions, means the control of the HUF is partly or totally from India, then that will avail the ordinary residential status. Now, in this case, if the control and management of the HUF is not in India, then that HUF will avail the status of non-resident. Now, in this point, we are discussing about the not ordinary resident. So, in the not ordinary resident, first of all, we will check whether the control is from India. Then, yes, if the control is from India, the status of the HUF will be the ordinary resident. But the karta, if karta is fulfilling these two conditions, means the karta was not the resident in the 9 out of the 10 preceding years, and his stay in India was less than 730 days during the 7 immediately preceding the previous year. In that case, the status of the HUF will be considered as not ordinarily resident. Third case is the non-resident. It is very much clear. If the control is not from India, control and management of the affairs of the HUF is not from India, or it is totally from outside India, then the residential status will be non-resident. Now comes to us the residential status of all the other type of persons, such as firm, AOI, AOP or BUI, association of person or body of individual. First of all the remaining these persons will avail the two status where that may be the resident or that may be the non-resident. These persons will not avail the residential status such as the not ordinary resident status. So it is very simple. If the control and management of the affairs of AOI, BOI or firm is from India, then that will be considered as the resident of India. If the control is outside India, control and management of the affairs of firm or AOI or BOI or AOP is from outside from the India, then that will consider the non-resident. And these type of persons can't avail the not ordinary residential status. Thank you.